On today's episode of the Cryptoverse. You know, I was staggered yesterday at the comments with regards to my singing. I can't believe how easily some people are triggered by just some dude doing a bit of random singing on a random YouTube video. Like, how do you people get through the day? Seriously, I honestly don't understand that. Anyway, on today's episode of the Cryptoverse, I found some reasonably big Ethereum news, but I don't see how that actually caused the massive price increase, so we'll look at that. Coinbase halted Litecoin and Ethereum trading yesterday during the intense trading volume. Japanese internet giant GMO is set to launch a scheme to allow its 4,700 employees to take a portion of their salary in Bitcoin. That's what I'm talking about. And President Trump signs off on a large military spending budget which mandates a research study into blockchain technology. So all of that on today's episode of the Cryptoverse, so stay tuned for that. Hi there guys, this is Chris Coney speaking, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. Story number one, Ethereum moons, but I don't think it was the UBS news. So let's begin with the Ethereum chart to see how big it mooned. So here it is, Ethereum against the US dollar. 3 all-time highs in 3 days, right? Kind of sounds like Litecoin. The whole cryptoverse is now capped at about $500 billion. Still tiny compared to the old financial system, right? So what shot Ethereum's market cap over $63 billion? Well, there is one piece of news that came out about, well, it's actually on UBS's website, which I'll pop over here to their blog if you like. Do they call it a blog? Their news section. This is the UBS website and the news section. And it says here, Barclays, Credit Suisse, KBC, SIX, and Thomson Reuters and UBS collaborate to advance the MiFID2 data reconciliation project using Ethereum smart contracts. Now, most of you will probably have heard of UBS before. They're a global financial services company based in Switzerland. You know, they provide things like wealth management, asset management, investment banking, private banking, corporate banking, all that sort of stuff, right? And then from the 3rd of January 2018, companies in the EU will be subjected to a new regulatory reporting standard called MiFID2. 2, right? It's the second version of this. I think the original version came in November of 2007 or 2008 after the financial crisis, and this is like an updated version of it, right? What I find interesting about that regulation in particular is that it implies to investment intermediaries. I actually read that this morning. Meaning it would not apply to, say, peer-to-peer systems like a decentralized exchange, right? Which is kind of cool. If you only read this headline, though, on the UBS website, right? Sounds amazing, right? However, the enthusiasm quickly gets dampened when you read the first paragraph, right? It specifically says here they're going to run a permissioned blockchain on the Microsoft Azure cloud platform. So because Ethereum is open source, they can just take the source code and launch their own version of Ethereum, you know, privately for this particular use case. So they're going to build their own separate Ethereum-based blockchain to run this new system on that they want to use to comply with the regulations, right? So that means they're not going to be buying Ether from the market to pay transaction fees because they're not going to be using the public Ethereum network. They may find it beneficial in the future to make use of the public Ethereum network, but that remains to be seen. And they kind of have to take this approach really because the public Ethereum network just isn't going to scale in time for them to be able to make use of it. I mean, it says they're doing this to get in line with the regulations that come in 2018. And I was reading on the Financial Conduct Authority website in the UK, I think it comes into force on the 3rd of January. So the regulations are coming and these companies just don't have time to wait for Ethereum to scale. So they're going to create their own private version of Ethereum, right? But besides that, even if scaling wasn't an issue, then I still think they'd prefer to have, a permission blockchain that they controlled. And the bottom line to this story is that, they need to reconcile data across financial institutions. They don't really want to share data with their competitors. So having Ethereum smart contracts allows everyone to hash the data, submit it to the smart contract, cryptographically secure. The smart contract can secretly compare all the data, find any anomalies or discrepancies, and then reveal, where the discrepancies are. So that way, all the organizations can collaborate with their data, make sure it's all reporting correctly without actually revealing all to each other, right? So that's the bottom line. Why blockchain technology for these guys is the solution to the problem. So that's kind of good. But anyway, moving on to story number 2. Coinbase halts trading for Ethereum and Litecoin right in the middle of the massive trading volume. So CoinDesk have an article on this, and they've got a little symbol of like do not enter, access denied. It's Stan Higgins has brought this to us once again. So basically the peak GDAX was processing $1.8 billion of Litecoin trades. That was in a 24-hour period, mind you. I guess that was just a bit too much for the Coinbase IT infrastructure to handle, so they halted trading. This is not the first time they've done this, and I know Coinbase keeps cropping up in the news because of the poor performance of its, platform and so on. And I can imagine how frustrating that is for people who are trying to trade, right? However, we have to get some perspective here. I don't think these issues are caused by Coinbase slacking. I don't think that's the cause. I think they are doing their level best to upgrade their infrastructure, right? But every time they do that, the demand for their services seems to increase by another order of magnitude, right? Eventually, Coinbase hits certain limits on how fast they can grow. And by that I mean it takes time to hire new people, train them, set them up in customer service support centers and stuff like that. You reach these physical limits. Yes, we can transact at the speed of light and so on, but in terms of growth, you do hit these human limits, right? You have to set up new server infrastructure, new servers, integrate them into your existing cluster, all that sort of stuff. And every time they add something specifically to their IT infrastructure, they need to make sure they don't break anything they already have, because they'll have various interdependencies and so on, relationships between the various systems. So they need to make sure they don't break that, or worse, open up a security hole because they're rushing their upgrades, right? That would be catastrophic. So as frustrated as people are about the rate at which they're scaling, they would be much more frustrated if they rushed it and then their information got leaked, like what happened with Bittrex recently. Haven't got time to cover that story right now, but you can probably find that story for yourself. Brian Armstrong even says so much in this Medium post about scaling, right? He says, this is from a few days ago, he cautions everyone about possible outages to the Coinbase platform during periods of significant volume. There's actually a paragraph here saying there may be downtime which can impact your ability to trade, and they are investing heavily in growing their platform and so on. And Coinbase struggling, but it's not just them either. Last night I made several failed attempts to do a trade on Changelly because their site just either wouldn't load, and then when it eventually did load, their interface just wasn't responding, right? When you drop down the asset list, it just wasn't pulling the info out of the database. So I put that down to them just being overwhelmed with traffic. So they also have scaling issues as well. And if you've not heard of Changelly before, that's like a rival for Shapeshift, an instant crypto to crypto exchange that doesn't require an account or any registration or any ID, anything like that. So that's that. This also makes me wonder, this whole thing about Coinbase struggling and people trying to set up accounts with exchanges and Changelly having problems. That leaves me wondering, how many trades are missing from the market? How many trades would be put on? What would the volume be? And what would the ultimate result on the price be if there were no scaling limits and no barriers? If everyone who wanted to buy and sell in any given moment could buy and sell, that would have an impact on the market. So the price movements we see are only for people who can actually get their trades through, right? What about all the people on the sidelines who are waiting to get their Bittrex or their Poloniex or their Coinbase accounts activated, and then the funds going into that and all that kind of stuff. Even instant exchanges like Changelly, there are some people who want to put trades through, like me last night. That trade never happened, even though it was my intention, right? So the people are the market and all the desires and what they deem to be valuable and a fair price. And I wasn't able to affect the price in my small way last night when I was trying to do my Changelly trade because the system just wouldn't allow it. Yeah, it was just too much volume. So yeah, how many other orders haven't been placed because of these technical barriers? I just thought that was an interesting thought. Moving on to the next story, we've got actually 4 stories today. So this is story number 3, and we'll have a little bonus story. Japanese internet giant GMO offers to pay its 4,700 plus employees in Bitcoin. So this article comes from bitcoin.com. The article says as much as I have just said. GMO Internet Group are the company in question. So the way this works is the employees can't take their whole salary in Bitcoin. The scheme says that the minimum is around $88 equivalent, and the maximum is $881 equivalent at the time this article was published anyway. And basically their salary will just get reduced by the amount of Bitcoin that they opt for. So that's how that works. And the Bitcoin part of their salary will then be deposited into the GMO Coins account. So they need an account with GMO Coins, which is a cryptocurrency exchange that this company owns. As you can imagine, being called GMO Internet Group, and they have a cryptocurrency exchange called GMO Coins. So the employee would have an account, and then that would be the account that their Bitcoin is paid into. So that's kind of like an off-chain transaction. Pretty good, right? And granted, if they want to remove it, they'll have to go on the main network, but all of those salary payments can be done off-chain directly on the exchange. So that's kind of cool. So this scheme, they're going to start offering it to the employees of GMO Internet specifically, and then they'll gradually roll it out to their other 42 subsidiary companies that they own. So that's going to have a big of an impact. What will be interesting to see in particular is how many people opt for it, right? This is in Japan, after all, that has a theme, seems to be one of the more friendly, not just jurisdictions, but cultures that are embracing it, because, Japanese are super techy. They have robot toilets and all this sort of stuff, so they're not afraid to embrace tech. So I'll be interested to see how the employees respond and how many of them opt into this scheme. That would be very fascinating. And to me, this is a huge piece of the cryptocurrency puzzle, which is allowing people to be paid in crypto, so they can just skip that whole process of like taking their salary in crypto rather than taking their salary and then having to buy crypto with it on an exchange. That just cuts out that whole process of using an exchange, or at least the transaction of buying the crypto, right? Final story, the bonus story for today. Trump signs a defense bill authorizing a blockchain study. So this story also comes from CoinDesk. Here it is. Trump signs defense bill authorizing a blockchain study. It's a reasonably large budget. President Trump has signed off a $700 billion military spending bill that includes a mandate, right? So it's mandated that a blockchain cybersecurity study should be carried out, right? A research study. What it doesn't say is, okay, it's a $700 billion military spending budget, but how much of that is going to end up in the budget for the blockchain study, right? It doesn't actually tell you that. So that headline's a little bit misleading. It does say here, I've highlighted this bit in orange, it says, the Department of Defense is to investigate, quote, potential offensive and defensive cyber applications of blockchain technology and other distributed database technologies, close quote. So that's fine, but my favorite bit I've highlighted in yellow here. It says it will constitute, quote, an assessment of efforts by foreign powers, extremist organizations and criminal networks to utilize such technologies. Ding, ding, ding. And there's the opening to put obstacles in the way of blockchain adoption. See, that's the kind of thing I think when I read that kind of stuff. Reading between the lines and knowing the character of how governments behave, that's just how I read that, right? Granted, they would have to have hard evidence, as a result of this scientific study, but when did that ever stop governments from doing what they wanted to do anyway? Right? It's never stopped them, has it? The results of this study should be out in about 6 months, it says here, so we've got time to strengthen the ecosystem so that even if they do find evidence that some, like, fractional proportion of people are using blockchain technology and whatnot for evil things, it'll be too late and they can't uproot it. So that's my argument I've made a few times on the show about, say, 99.99% of the usage of Bitcoin, cryptocurrencies, and blockchains are good people doing good things with it, right? And only 0.01% of people are using it for illicit means. It makes no sense to eradicate the use of Bitcoin, cryptocurrencies, and blockchains, taking the massive amount of positive value away from the 99.99% just to get to that fraction of a percent who are doing bad things with it. The net loss in overall well-being, if you like, and overall positivity and contribution and value to the planet, you've just made it's a massive cost just to get to a few bad actors. So that's not the solution. I would seriously consider attacking those bad actors from a different angle, right? Rather than attacking it at the cryptocurrency level and then removing that huge benefit to humanity as a kind of a side effect, if you know what I mean. Anyway, thanks very much for joining me today, guys. If you liked this episode, go ahead and hit that like button. And if you're new around here, get subscribed. And if you would like access to my step-by-step online courses that will teach you things like how to make and save money with Bitcoin, then click in the eye in the top right corner here. That'll take you through to my website, cryptoversity.com. Click on courses, and then you'll see any of the online courses you can take that I've created for your educational delight. Alright guys, that's all for today. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.